Welcome to Market Buzz. I'm Greg Schnell, the Canadian technician and host of the Market Buzz. Each show we do a deep dive into different industries using weekly charts to see what is happening on a long timeline. Please follow me on Twitter at Schnell Investor, and you can also find my blogs on ospreystrategic.org as well as StockCharts.com. And yes, that's new for the introduction. We're changing it up a little bit, so I'll share that with you right away here. So first of all, what I want to cover off this week is a new rally starting because we had a pretty big Tuesday. Markets were up strongly. That might suggest that we're making a higher low and ready to rally out of here. And if that was the case, then we want to get on board. So how do we do that? If a new rally is starting, who are the leaders? What industry groups are leading? And how can we evaluate that? And we have a couple of different tools that we could use. I'm going to show one of them today. Can't show all of them in a relatively quick period of time, but we can definitely show one. We're going to use some pre-existing scan terminology, change it up slightly to get the answers we're looking for. And again, if you're looking for the gregschnell.com website, you're now going to find all of our work over at ospreystrategic.org. So our new website is getting up and running, and you can try out a membership service over there, ospreystrategic.org, for just $860. It's kind of $15 a week type of thing, a little bit more. But the whole idea is to try and set it up so that you understand the changing in the marketplace. Each rally brings with it new leaders, and how do you go find those, and then trying to step aside when something changes. We had some really big examples of changes this year with stocks like Facebook or Meta absolutely getting smoked. And so understanding that change in charting is pretty important to keeping your profits. And for those people that were still holding Facebook, which I imagine a lot of portfolio managers did, there was 250 billion in market cap wiped out in one day, and it went on to lose even more after that. So we try to, you're never going to miss them all, but we try to miss a lot of them. And how do we do that? We do it through using the tools that we can find on by using technical analysis. So we're going to jump into that. Anyway, award-winning technical analysis, a weekly newsletter, weekly video, monthly recorded conference call, and trade setups at least 5 per day. And again, I work with Dwight Galusha. So we're going to jump into the charts here. What I want to show is, this is the new website, so that's our logo. And the concept behind Osprey Strategic was that an osprey kind of hovers over the water and then goes into a deep vertical dive, grabs what it finds, and then carries it up and out of there. And that's what we want to do. We want to go in, look for the opportunities, dive when it's just about the right time, pull out and try to ride the market up with us, and then just go back in a scanning mode or hovering mode while we're waiting for the market to reset up. So that's how we came out with the logo. We'll have lots more on that coming up over the next few months. So here is the Nasdaq, and what we had today was the Nasdaq up 2.5%. And what's nice here is we're making a series of higher lows, so that's a pretty bullish thing. We're still below both 50 and the 200-day moving average. That's not great. I do like the fact that we have a big downsloping trend line in momentum here, and that looks to me like we're changing that. So that's a positive. And we go look on the weekly chart. Our full stochastic looks like it's ready to turn up. And to me, that's another bullish clue that things are starting to get going. We have this little downsloping relative strength trend compared to the S&P 500, and right now it's wobbling. But if the Nasdaq can start to outperform again, that's typically a bullish period to be in the market. If you look closely, whenever there's an uptrend in relative strength for the Nasdaq 100 compared to the S&P, that's a pretty good place to be on board. And when it downtrends, that's when you start to see these red candles. So far, we're only, this is recorded on Tuesday evening, we're getting a blue candle, the first blue one since the beginning of January. Perhaps we can turn this thing around and actually get a rally started. The real question is, are there enough buyers going to step in? But you got to start somewhere. And Tuesday was a good attempt at trying to push that higher. We had great price action from some of the leading groups like semiconductors as an example. So all of that lines up with my thoughts for a potential rally. And one of the quickest things we can do is just say, okay, we're breaking out to new highs, or we're breaking out into the next rally. What's leading us out of the hole? So StockCharts has a thing called Predefined Scan results. And what that Predefined Scan does is basically they've gone and looked for certain things. And in this case, we could use any one of these. But you'll notice on Tuesday, we had 32 new 52-week highs and 29 new highs on the Nasdaq. Now, the concept that we're looking for here is when a stock starts to break out and is moving to a higher price than somebody's been willing to pay for it in the last 52 weeks, that kind of tells us that something's probably changing on that chart. And I'm going to give you a couple of examples. One of them would be Expedia. So Expedia has obviously been in the travel segment, and it's been beaten up, and really for the last year, the price on the chart has moved sideways. Over the last 2 weeks, it's trying to push higher up and make new, what we call 52-week highs or new one-year highs. So we can take this list and we can work with it. So if we go scroll down in here, you can look, and here's Expedia, and if we just kind of hover over it, you'll see the chart was hovering around 190, 180 there, and now all of a sudden it's taking off to the upside. That's very bullish price action. Again, in one day it's up 7%. But the bigger thing we'd like to notice is our hotels and our other things that might be related to that starting to break out. And that's the concept I want to share. Now, one of the things about this particular scan, and we can go look at the scan wording, is in here. And what you'll see is that today's daily high has to be greater than yesterday's daily maximum over the last 253 days. Okay, that works, but one of the problems is it has to be hitting a new high today. So if it didn't make a new high, like higher than yesterday's high today, it's not going to show up, but maybe it's still close. So we could also go look for things that like make a new 52-week high rather than a new daily high. So in order to do that, we edit the scan. So you'll notice in here we've got daily high and yesterday's daily and daily high here. I'm going to change that, and I'm going to rework this scan, and I'm going to use weekly high, the last weekly high, and weekly. So I've changed the word daily for weekly. There was a word yesterday in there, but yesterday weekly doesn't work, so we say the last weekly, or 1 week ago, 2 weeks ago, that kind of thing. And what we want to do with this is if it's made a new 52-week high anytime in a week, then we get a result. And so I've taken that data when we run this scan, and I've done it for both the Nasdaq and the NYSE stock exchange, and put them both into a chart list together. Now, we can add a few other columns in here. We can add sector and industry, and we could try to sort by that. So we're going to sort by sector and then sort by industry. And we're going to get new ETFs showing up at the top of this. So let's just quickly scan those. Lots of them are oil, gasoline. And we're looking for anything else. Here's gold starting to pop up, so that's kind of nice. And then anything else? Not really. Here's an acquisition company, high yield, going short high yield bonds, so that's something that's been working lately. But we've got a couple of these acquisition corps, probably SPACs as an example, and they're starting to make new highs, so maybe something's going on there. But for the most part, all of the ETFs are still kind of showing the stuff that has been working, and it's not that I don't think it's going to continue working, it's just we're kind of looking for what's new, what's starting to work now. So how do we do that? Well, one of the things, so I mentioned the travel area, and one of the reasons I mentioned it is Booking.com looks like it's ready to break out. Expedia is already broken out, and we're starting to see, here's an airline, and again, they've been terrible, right? So here's an airline, and it's breaking out of that base, the 1 year base. It's all about the base. So what we want to see here is now that this airline is starting to surge, that gives us a clue to go and start looking around the rest of the travel. And normally we're going to find that in consumer discretionary, so we can scroll down on this column. Here's one discretionary, just trying to think what else it might be under if it wasn't in there. Here's Las Vegas Sands, so more discretionary. Oh, that's right, we sorted on, let's do this differently. We're going to sort on industry and then sector. And so now it'll group all the sectors together and then have the industry groups beside it. So that's what I was hoping for. So you can see, sure enough, we've got travel and tourism, toys, restaurants and bars, recreational services. All of these are just starting to break out. And I think it's this clue that we're starting to see it across the piece. So here's gold and entertainment. That one's breaking through $55 nicely. Las Vegas Sands had a 6-month base here. I'm not sure why it shows up on my 52-week scan. That's pretty interesting. Hyatt Hotels literally taking off. That one's really well done. Here's Marriott. They had earnings tonight. SeaWorld starting to break out, so people going back to theme parks. Cedar Fair, this one literally 47 to 60. Nice move. Ruth's Hospitality Group, I think this is Ruth Chris Steakhouse, if I'm not mistaken. And then Expedia, as I mentioned before. So we're starting to see this whole group literally start to step out, even though the stock market is still below, or the index is still below the 200 or around the 200-day moving average. These things are powering forward, so they're outperforming the market. And when we want to start looking through this list again, we've seen oil and gas on here quickly for a while, but here's banks, and there's 10 of them that started to make new highs today, and we could just keep looking through here and see if any are just breaking out. I want to find it when it's down by that December level on NCBS as it's going through that base. I don't really want to pick it up now that it's up, 20 or 30% above that breakout level. One of the reasons for using a breakout level is all of a sudden all the people who have owned it before are happy to own it. Once it starts to run a while, they're actually selling into the rally, and they create the friction that actually marks the top over time. So here's another one. Flick looks like it's ready to break out. This one's already moved up from 28 to 30, not too significant, but nonetheless a little bit extended. Here's Old Second, and it's just starting to move. Mr. Cooper Group, that one kind of sudden surge. Here's one, I like that breakout. That looks pretty stable and something we can work with. So you get the idea just by scanning. This is literally just taking 1 week's new highs and what's starting to cook in the kitchen. And then we can go and just look through these different areas. So let's store these results. And the way we do that is we scroll to the bottom and we just say number in sorted order. And so we can click on that. And now when we click on this chart, though, the problem we're going to get is these are all set up for my daily. So I'm going to move it over to weekly. I'm going to shorten it to, say, 3 years just to give us a little more space on each price bar. And with that, we've got a setup here. And now I'm going to apply this style to all the charts in this list that we've made. And again, this is just in a scanning list. This isn't, I could write over this tomorrow, so I'm not too worried about it. I'm just trying to create a way of looking at the market to see what's going on. And we want to be aware of either stocks hitting new 3-month highs or 6-month highs or 1-year highs. And in the scan I did, oh, that's right, when I did this scan, I changed it to 26 weeks. So it was only 6-month highs instead of 1-year highs. And that's, again, we're trying to find stuff starting to break out. That's going to work for us. And I just picked the 2 indexes, but if you're Canadian, you could pick the Canadian exchange and put it in here. And so that's how we would work with this data. Now, moving on, again, we've got these charts coming up. So the first part of our list here is ETFs, and we can just quickly go to CandleGlance view. And in CandleGlance, this is set up for daily. In the past, I've shown you how to change this from a from a daily to a weekly chart in your CandleGlance, and maybe I should just go do that again here. Let me just add another chart. I'm going to go in. I'm going to go down here, and I'm going to say, I'm going to pick the CandleGlance chart right now that I have set up, and this is my daily version. But if I wanted to make this, if I wanted to put a weekly chart in there, I've saved a couple of different styles here. So let me just pick my CandleGlance weekly, and then what I can do is I can say replace, and I just replace the CandleGlance version. So again, I've got them already, and I just have to go and drop it into the main place. And now when I go do this list over here, all of a sudden, all of them, I'll just hit refresh, and now they're all going to be weekly charts with 2 years of data. So using the tools that we had on the StockCharts platform, we can very quickly get to look through things. Now, I don't really want to go through the ETFs yet. I'd prefer to go to find individual stock names. So let's just start down the list. And here we are. We're in the energy group. If we go back a little bit, this is still funds. Okay, and now we're into stocks here. So Newell Brands and Universal Technology. So this chart's got a nice downtrend, just starting to turn up here. We've got Golden Entertainment. Again, that's a nice looking chart. Las Vegas Sands starting to pop above the 40-week moving average. That looks really good. And then Hyatt Hotels here breaking out above this $100 level. It looks so much more stretched on the daily chart. Marriott just starting to cook here and get out of the kitchen. And then we've got SeaWorld. So as an example, you get to start to see really quickly these charts that are just breaking out of bases. And for me, it helps me understand where the market pressure is, what's trying to go higher. And obviously, we've had oil names up at the top here for a while, so it's probably not a new area that we want to get into. We'd probably like to start finding something that's breaking out from previous areas. Now I'm just looking. So here's the banks. We're into the financials here. And you can just look across here and see if there's any particular size or scale that you're looking for. And again, I'm typically looking for something that's still consolidating, but looks like it's getting ready to pop. And you can see how all of a sudden it goes through this strong consolidation. And literally this is 25 to 30 since the beginning of the year. And all of a sudden you're up $5 on a $25 stock. So a nice 20% gain, and we're into middle of February. We're looking for stocks that are just starting to do that as we get going. So as we check down farther on the list here, these can also be nice here when they're on a nice steady uptrend, but the problem is you don't want to buy them when they're on the high of the uptrend. You'd like to buy them when they're bouncing off the 200-day moving average or the 40-week moving average, and as they're starting to bounce back up. So it's a different approach, but in this case you're trading a channel, and you want to pick it near the low of the channel. In this case, you're seeing a consolidation, and that's finally changing. It's breaking out of the consolidation, so you've got something to work with. Hopefully, I explained how to think about those differently. Here's Henry Sheen breaking out to the upside. That's a nice, for me, this is better. I like this better than I like this. This is okay, but I'm not as interested in buying this high as I am interested in buying this breakout of a consolidation layer. So here's Amphastar, never heard of the stock. All of a sudden pushing through 22 here. It's at 27 already. That one's a little bit too far gone for me. This Innoviva just breaking out today, so that's pretty nice, or this week. AAR Corp, that looks like a nice breakout. I'm just trying to, again, identify a chart pattern that we like to see. So as the market changes from one period to the other, it's pretty important to just be aware of what's going on. Now, let's go look at a couple of things on the dashboard here. When the stock market's starting to change, the one thing that we're starting to notice, there's a really high correlation between the price action on these cryptos and I wouldn't say it's a direct correlation, but more like a general correlation. Let's just clear all this out of here and put up price, and we're going to grab the Nasdaq. Okay, so what we see here is, in general, the structure is roughly the same. We're trying to break a downtrend here on the crypto, or on the Nasdaq, and we're trying to break that on the crypto chart here. So I would just suggest if this could start to get going, this is looking pretty good. Now if we go to annotate this chart, I'd be inclined to draw this as a left shoulder, head, and right shoulder. And to me, this looks, a very nice technical setup for a breakout. Just going to position this in here. And so if you get a break above, let's say 3,200 on Ethereum, this is a nice place to watch it for that. Now, if it stalls here, again, we probably want to keep in mind an overall trend line, maybe something like this. Just saying, okay, that's whatever. It's kind of this point here, in here, misses this a little bit, but just to give us a feel, will we hit resistance at 3,400? We'd still be below the long-term 200-day moving average. All of that's possible, but again, we've got to try and take the setup and then deal with how far the rally goes after. And we're a little bit beaten down here, right? We're at 6-month lows on the Nasdaq, so you could have bought these same prices back in June. So now to be able to pick this up at 14.6 again here, if we can turn and burn higher, that'll give us quite a nice thrust in the market. We're trying to use a combination of indicators to help us feel that pressure to the upside, or get in when the pressure works a little bit better. Than, as an example, you're holding in here and all of a sudden it takes its next leg down. Now what do? Well, we've got exactly the opposite. We ran up, I was selling in here. Now it's pulled back and I wasn't sure if it was going to hold, but if it is going to hold and start to take off, then I'll just take my next leg higher in some new stocks that are breaking out. So maybe a Booking or an Expedia or something like that. So as these charts are starting to work together to give us some clues of where to look next, this is one of the ways to do it. We first of all want to interpret, are we getting bullish price action in more than one thing? And one of the problems we had for the last part of this rally, off the lows in January, was the large caps weren't performing. So if you went to Apple, it was really just kind of going sideways here for almost 2 weeks. And I'm just going to trade that up a little bit. So no real price action. This wasn't too bad. Kept up with the index basically. And then if we go to Google, okay, Google still looks a little bit weak. This was a breakout to new highs and it just continues to make lower highs. So that's not a breakout yet. And then we've got Amazon just still grinding sideways. So this doesn't look as much like a breakout here. We have Meta, let's go check that out. That's still ugly. We have Tesla, see if it got any bounce today. It's still in the sideways range. Again, it's hopeful, but we had a big price bar back here. We had a pretty solid price bar in here, and now we've got another, this was a 5% move from here, yesterday's close to today's close, or Tuesday's close. All of that is helping us to interpret what's going on in the market. We probably need the big leaders, the generals, to actually start making higher highs here. If the market's just going to flag sideways, I would suggest we'll go lower. So we have some clues like crypto starting to perk up, and then we've got the Nasdaq chart itself trying to form. We've got some new groups starting to break out to new highs, but we still don't have these big generals getting ready to fire up and run. So for me, it's still a mixed picture, but again, I want to start looking at what could work. And as an example, if all of these travel stocks want to work, then maybe, we're going to go into airline names. That looks, we'll just add a few weeks here so we get a little bit of perspective. If the airline stocks can finally break out of this downtrend, that would be helpful. What about Delta? That looks a little better. I think it's Alaska Air. So this is starting to make 3-month highs. That's a nice place to look. I think you get the idea, but again, if the market is changing, we want to go and look and see what's going on. I think one of the best ways to do that is to go into the predefined scans. And again, where do you find that? It's on the charts and tools page. Halfway down here on the right hand side is the predefined scan button. So with that, thank you for taking the time to join me on Market Buzz. Market Buzz airs Wednesday at 10:30 a.m. Eastern. You can also see the recordings on the StockCharts TV YouTube page. Thanks for taking the time, and remember to head over to ospreystrategic.org and just check out the website, see if there's anything there for you. Thanks everybody. Bye-bye.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.